I grew up in Brooklyn and everyone had their own house and you just like stayed in your house forever. And then your kids stayed in that same house forever and you just never left. So when I got into real estate in Manhattan, I was very surprised when my clients were calling me 1 year later after we bought something and they were ready for the next thing. And I'm like, oh, already? Like, I know they talk about, repeat business, but this is fast and it happens so fast, especially in Manhattan. And, when you're in apartment style living where you're outgrowing, or you're upsizing, downsizing. You have something going on, yeah. Welcome back, guys. You're listening to Real Estate Investing in New York with me, Christina Cremidas. And on this episode, we have a phenomenal mortgage lender, Carrie Morrison, with us from Citizens Bank. And we have my teammate, Joseph Tesoriero, with us as well. So stay tuned. We're covering everything here. This is Real Estate Investing in New York with Christina Kremidas, helping you achieve a future of financial success by making intelligent real estate investment decisions today. Carrie, welcome.
Thank you. Hi, Christina. It's so nice to be here.
It's amazing to have you. I'm very excited for all of the info you're going to be giving us.
Oh my goodness. Yes. Thank you. No pressure.
No pressure at all, but I know you know everything forward and back. So I'm so thrilled. So let's just jump right in. How does 2025 feel to you so far? What do you think is going to be happening with deals, rates, volume?
Yeah, so I'm excited about 2025. I'm happy the election is behind us and I feel like buyers are out and they're ready to buy. So I've been pre-approving a lot of customers, so I'm optimistic.
Same. We said that too in our recent episode that we just filmed together. We feel momentum. We feel volume has increased. Buyers are out looking, placing offers finally, because it was a lot of pre-approvals and no deals, right? It was last year was pre-approval, but no offers. Like that was difficult last year, was getting deals done. This year we're seeing the deals happen.
Yeah, I feel like people are getting used to the high rate environment, unfortunately.
Yeah.
Or they're finding other ways to make things happen. But no, I'm feeling a lot of positive energy. So I'm excited.
Would you say people are coming in with more of a game plan, like they know more what they want rather than they did last year when they were just kind of like maybe looking or just waiting?
Yeah, I would say people are maybe more picky and they're ready to make a decision.
Okay.
I think a lot of buyers too have been around for a few years. You know what I mean?
Mm-hmm. Right.
So they're hopeful.
Yeah.
That the spring market is like about to start. Remember we were talking about the spring market? I've always told my customers that it starts the weekend after the Super Bowl because guys actually get off their couches and are willing to go look at properties.
Sunday they'll go out. Yeah. Saturday and Sunday they'll actually go out of the house.
So, I mean, men on couches do have an impact on the housing market.
Right. So things will spring back up like mid-Feb.
Yes, I'd say the weekend after the Super Bowl is when we'll see more listings come on.
I love that. Yeah. I'm going to start using that. I love that, the week after the Super Bowl.
Yeah, so now's the time to get ready and get your pre-approval because you usually can't even see the property without a pre-approval letter.
Yeah, it's difficult to get in sometimes if you don't have that. Mm-hmm. So when it comes to rates, right? Like I don't want to talk too much about rates because it's like, oh my God, will we ever stop talking about interest rates?
Yes.
And there's only so much you can say. But what are you seeing? Like, is Citizens competitive? How are you having these conversations with clients?
Yeah, so Citizens is very competitive, hence the reason I'm with Citizens. It helps to be with a lender that is competitive and willing to do rate matches. Rate matches have become a very important thing. Nowadays, I feel like the market is a lot smaller. There's fewer transactions, right? So you have all these lenders scrambling for these deals.
So tell us what that is. Like, what does it mean to have a rate match?
Each lender does things a little bit differently. Some lenders aren't really in the rate match game. Citizens is. So if you come to me with a competitive offer, right, and you're like, Carrie, I'm getting X rate from a competitor, I can most likely match that, but I would need it in writing. So we're not just going to take your word for it. You'd have to send me something in writing, and then I would escalate internally.
Like a pre-approval letter from a different lender?
Not a pre-approval, like an email or
like a quote.
Like a quote. Yes, or a formal loan cost illustration. with the rate. Citizens does not want to lose loans because of the rate.
What about a client that has, let's say, like a special relationship with a bank and they're getting some type of like incentivized interest rate or an employee special interest rate or something like that? Like you think you're able to?
We would look to match that as well.
Wow. And do you match it or do you beat it?
Only match, no beating.
But that's better than nothing. Yeah.
Yeah. Yes, it would be great if we could beat those rates, obviously. We definitely can match, though. And then I tell my customers, you should always be following rate trends because when you lock in, typically you're not closing for 60 days. You need to keep an eye on rates between locking and settlement because you could have like an eighth, a quarter, 3/8 movement that you're not capturing. You know, everyone's so worried about the rate on the day they lock.
Yeah.
What happens over those next 60 days between locking and closing?
So what happens?
You need to keep an eye on the rates because you could always float down your rate.
Can you? Because not every bank will let you.
Yes, Citizens does allow you to float down the rate.
So explain to us what this means. If you lock at a certain rate.
Yes, let's just say you've locked at 6.5%. And then the market becomes 6.25%. You can float down. There is a fee involved, but it's a minimal fee. So it's definitely worth keeping an eye on rates.
So you pay a small fee and then you can get the lower rate to close.
Yes, up until like a few days prior to closing.
I know that most lenders do not let you do that. I'm sure of that because we've had a lot of scenarios happen last year when the rates were going up and down, where we had buyers that their bank didn't let them come down in the rate. So that's great.
Yeah, I would strongly suggest locking in with a lender that allows you to float down your rate.
So that's a good point. When our audience is considering who to work with for their loan, you would say to have that be one of their questions.
That's a huge, because everyone's like trying to get an eighth lower. Do you know what I mean? Like, can you do 6.5? Can you do 6 3/8?
Right.
Like, everyone's so worried about that eighth of a point, but they're missing out on like a bigger picture. Like, can you do the interest only feature for no upcharge? Like, that's something that Citizens does. I can offer you the same rate with the interest only feature. That's huge.
What does this mean?
It just means that it's the same. So let's just say you come to me for a 10-year ARM, right? That 10-year ARM, it's a 30-year term. It can come with the interest only feature, which means you're only paying interest for the first 10 years, or you can get that same 10-year ARM fully amortizing, which means principal and interest for all 30 years. It's just that the rate is only fixed for the first 10 years. So that interest only feature for the first 10 years allows you to maybe spend a little bit more than you would. So it does give like a 20% lower payment option.
That's great.
So that makes your monthly lower because you're just paying an interest? Is what you're
Correct. You're only paying interest. So you're not paying any of the principal back. Now you can, there's no prepayment penalties. So of course, like you can pay principal back, but if you're someone who gets a bonus every year and just wants to pay down principal, what's nice is then your next month's payment is based on the lower principal balance.
Very
so
good.
Only paying interest on the balance that's owed. So these are all things that, like, when you're shopping for a lender, like knowing that they can reprice your loan even after you're locked, knowing they can offer you interest only at the same rate as an amortizing loan. Like, these are huge added benefits.
Yeah.
That people are missing out on.
Right. You got to strategically ask the right questions. Don't just ask the mainstream question of what's the rate. So you mentioned ARM type of loans, 10-year ARM, 7-year ARMs. Explain what is, so an ARM stands for adjustable rate mortgage, which means that at the end of the 10 years or 7 years, if it's a 7-year ARM, what exactly happens at that expiration? Does the loan automatically go up to whatever the market rate is on that day? Like, what really happens at the end of the expiration of that 10-year, for example?
Yeah, so ARMs are tied to something we call SOFR, which is an index, and then there's a margin, and the margin's 2.75. So at that, after the 7 or 10 years, at Citizens, we have a 5, 7, and 10-year ARM. So after the fixed part of the ARM, it would adjust to whatever SOFR is plus the margin. So that does scare a lot of customers away from an ARM.
Oh, so if the rate becomes 8%, you could go up to 10.75.
Correct. But there's caps. So the cap is 5% above the start rate.
Oh,
So
okay.
if you start at, let's just say 6.5%, the cap for the life of the loan would be 11.5%.
Got it.
So there are caps in place. And the truth is most of the time when you buy a place, it's not for 30 years. It's like for 7 to 10 years.
That's the average.
Yes.
Right? Yeah.
Yes. It's interesting though, that was the average. Now with rates being higher, I don't know, people are less incentivized to move, but I feel pretty safe for the most part with a 10-year arm.
You advise. So it depends on the client, right? But
Yeah, and the larger the loan amount, the more impactful it is, that quarter rate savings.
Yeah.
Between the 10-year arm and 30-year fixed. So definitely something to explore.
So the interest rate's better with an arm.
It's about a quarter lower. And our best product is the 10-year arm. The 7-year arm is priced higher than the 30-year fixed.
And now, is your monthly, you might have already said this, is your monthly payment higher because you're getting an arm?
No. So initially it's lower, right? So
That's
if you
the
do a
benefit to the
10-year
arm, yeah.
Your payment's going to be lower for the first 10 years.
Okay.
What you're taking a guess on is what your payment is after 10 years.
Yeah.
So you're only taking rate risk on a 10-year arm after the initial 10 years.
Right.
Can you do another adjustable after 10 years, or it has to become a 30-year after?
No, you can keep doing, you can be a continuous arm
And you could,
customer.
you could refinance anytime within that 10 years. Like, I'm going to
Correct.
take another 10-year at year 5.
Yes, exactly. Or at year 1 or at 6 months. Obviously it's we're not seeing a lot of refinances, but hopefully we will in 2025. And people don't understand that you can refinance. Sometimes it makes sense to refinance when you only save 3/8 in rate. The larger the loan amount, the more beneficial it is to refinance. And you calculate the cost to refinance versus the monthly payment savings. And that break even number makes your decision for you. So if you know you're going to break even from refinancing after 12 months, you should do it.
Yeah.
And that's what a lot of my clients ask me. They say, how would I even go about refinancing? And like, how would I know if it's a good deal for me to refinance? When do I know if it's good? And you explain you break it down for them, right?
Yeah, so it's the upfront cost versus the monthly savings. It's so simple.
And there's a break-even point.
There's a break-even point. And I always do it in months, right?
Well, people really think that their monthly payment is going to be higher if they take an adjustable rate because they think that they have to pay it off in that 10 years. And it's like,
no, it's a 30-year term.
Yeah.
Yeah, so you're only taking payment risk after the 10 years. That's a great point.
I would like to ask you a question that a lot of our clients ask, and it is, does it behoove them to put down more? What are the benefits of putting down a larger down payment versus a smaller down payment?
Yeah, so from a rate standpoint, you're not going to get much of a benefit in the rate by putting down more, especially if your credit is excellent. So once your credit score exceeds 760, the rate benefit is so minimal. You're better off taking that extra 5 or 10% and investing it in the markets for a return than saving an eighth in rate. So if your credit is poor, there's more of a rate differential by putting more down. But overall, there's really, maybe you'll save an eighth or a quarter by putting down an extra 10 to 20%. It's not much though.
Interesting. And then what about your monthly payment, for example, at today's rate or today's average rate? What are you saving monthly by putting down more, for example?
Okay, so of course this changes and I'm using round numbers, but I always tell people per million, because it's a round number that you borrow, your principal and interest payment is approximately $6,000 a month. Right? So per 100,000 that you borrow, it's $600 a month. So if you really like an apartment, you have to think am I willing to pay an extra $600 a month and, borrow an additional 100,000 to make that my home?
Right.
Those numbers do change, but those are the multipliers that I'm using now.
Yeah.
My other good multiplier is 2 to 3 times your income is your purchasing power. So if someone calls me and they're like, I make $250,000, automatically I think your purchase price should probably not exceed $750,000.
Right, which tracks. Unless you're looking in New York City at a co-op where in order to get approved, you're going to need to show 4 times.
Yes.
4 times your, well, you need to exceed your expenses on the co-op by 4x in monthly income. So they're more strict. They're a little bit more strict. So that's the only reason. That's sometimes we cross-check extra strong when we have a client looking at co-ops. But that makes perfect sense to me. The 3x. That's a good. I love your multipliers.
Yeah,
So
I like to keep things simple.
I love that. So do you have an example for us? Like, for example, 0.25% of a rate fluctuation would affect your $1 million loan by how much?
Yeah, so Christina asked, like, let's just say rates come down a quarter point. Like, how much savings is that? So per million that you borrow, the savings is going to be like between $250 and $300 a month. So per 100,000, a quarter in rate only saves you like 25 to 30 a month per 100,000 that you borrow. So it's not that much.
It's not that much.
It's more mental.
It is totally mental.
Yes.
And people assume like, oh, but by the end of the 30 years, it amounts to a lot. But the other thing that you mentioned is that you're probably not keeping the same loan for 30 years.
Yes.
You're probably going to sell, or you might refinance or pay it all off. You never know.
Yeah, I'd say the average life of a loan is like 7 to 10 years. And then people either move or refinance.
It's,
But that's just like my estimate.
it is. It's a lot lower than you would think. I mean, especially, you know, I grew up in Brooklyn, and everyone had their own house, and you just like stayed in your house forever. And then your kids stayed in that same house forever, and you just never left. So when I got into real estate in Manhattan, I was very surprised when my clients were calling me 1 year later after we bought something, and they were ready for the next thing. And I'm like, oh, already? Like, I know they talk about, you know, repeat business, but this is fast, and it happens so fast, especially in Manhattan. And, you know, when you're in apartment style living where you're outgrowing, you know, or you're upsizing, downsizing, you have something going on. Yeah.
Yeah, there's always a reason to move
anything,
here.
You mentioned a couple of extremely good questions that you should ask your lender if you're comparing lenders. Was there anything else that people need to make sure they ask their lender when they're making a decision?
Yeah, so for jumbo loans specifically, ask how strict they are with building approvals. Citizens is going to be your best bet if you need any type of building exception. So
Excellent point.
I would always ask that if you're buying a condo or co-op. Ask about relationship pricing. Citizens has relationship pricing. That's huge on jumbo loans. Also auto pay. If you set up auto pay with Citizens, you'll save 1/8 in rate. And then the reprice feature. And also the product offerings. Like it's interesting to me. I've been doing mortgages now for 19 years, so it makes me feel old. But if someone asked me for a rate quote, the only 2 products that really make sense in the jumbo space are the 30-year fixed or the 10-6 ARM. I mean, of course you have a 15-year fixed, but the savings is minimal and your payment goes through the roof. So
Right. You're paying like double the principal.
exactly. For like a minimal rate savings. Like no one's doing a 15-year fix nowadays.
Right. No, I never see that.
But it's crazy only quoting like a 30-year fix and a 10-year ARM.
Right. Right.
So yeah, fun stuff.
It is good stuff. Yeah. This is so helpful. I mean, especially too, because a lot of times my clients who are buying will come to me and I'll talk to them about their lender, and if they're taking out a mortgage, I'll ask if they have a bank that they're already comfortable with, that they know that they're using. And a lot of times people assume that they are going to use the bank where they do their personal banking for their mortgage loan. And it's not often the best bet. It's not always your best option, right? Just because you have a checking account or a savings account at a bank doesn't mean they're excelling on the mortgage side of things. It's a completely different business to be in.
And banks love cross-selling and having those, we call them like sticky accounts. Like if you have a credit card with us or a checking account, you become sticky to that institution. And you really, I always tell my customers and friends, you should be shopping at least 3 lenders because everyone has different programs, products, and different way of doing things. So I really like shopping 3 lenders. And it's not a bad idea to have a plan A and a plan B and apply with 2 lenders. Really, you can be in the process with 2 lenders up until the closing day. It's just who you close with. So if you're worried about your deal getting done, apply with 2 lenders. Have a plan A, have a plan B. I've told people, I don't mind being your plan B.
Well, you're saying it, not me. I'm like, I wouldn't say it in front of you, Carrie.
No.
No, I'm kidding. Well, sometimes it's very, to be honest, it's rare that we do have buyers that make it far along with more than one lender. We've had it happen. We've had buyers that want to keep their options open with multiple lenders. Again, because you never know what difficulty is going to arise during the deal process. You never know what due diligence will uncover or what's going to happen at the 11th hour and which bank is going to be able to get around it. I know we've come to you many times to save us in the 11th hour with loans that we started at different banks that we had to come over to you in like an emergency fashion at the end and say, can you do this deal? Because the bank, for some reason that we were going with originally, can't do it. So you never know.
Yeah, each lender has like their own nuances and appetite for different risk environments. So it's interesting.
Talk to us about the building exceptions, because I think that to someone that's not like actively in the market or has experienced what that is, it might not mean much to someone that hasn't begun the process yet. But the building exceptions are huge for us.
Yes.
Give us an example of what these building exceptions are, and what it means to get an exception.
Yeah, so we have a condo team, and all they do is underwrite condos, right? And local law 11 is obviously a big focal point now.
One of the biggest. We just did a recent episode about it, so our audience knows. They were downloaded on the recent changes and how strict lenders are now with local law 11 status.
Yes. So what I would suggest is if you cannot get a loan done with one lender, apply with another lender. Because I just had a loan I couldn't do. I sent them to my friend. A loan I couldn't do with my previous employer. I sent them to my friend and she got it done. So, you know, lenders look at local law 11 differently, which is interesting.
This
It's
is
not so set in stone as
Right.
you might think it is.
Yeah, this is the building's mandatory brickwork that they have to do. They have to get a specific safety rating, and banks are now very strict on that.
Yes. The other big thing is insurance. A lot of times there are insurance obstacles, but they're solvable. You just have to ask questions.
Right. This is what Carrie is talking about. Buildings that you might be buying into have blanket insurance policies that protect the building in various scenarios. The lender, you might not see it because they're doing it on the back end, but they're asking a slew of questions to the building management about what this insurance policy covers in your building. If it's not specific to what the bank is looking for, it doesn't necessarily mean that it's bad. But if it's not specifically what the underwriting department is looking for, then they really could just reject your loan and you could be left with nothing unless you have a problem-solving loan officer that's going to actually use common sense and ask the right questions and solve it, right? Whether it's an exception, granting an exception, or going to the building and
asking them to modify their insurance certificate.
Yeah.
If you're managing a building, you want your buyers and sellers too to be able to get financing. You know, it helps with the value of the building if the insurance is approvable.
Right. You don't want, a building doesn't want to be in a position where the lender can't do their deal. So they will. Yeah. Exactly. We see a lot of times, this is a more difficult exception to get granted, but sometimes we can get it granted. And of course, there's a balance of like, is the buyer qualified? Are the other things on the loan in good enough shape that we can get a bigger exception? Because once there's too many things wrong, it gets harder. But for example, a building where more than a specific percentage of apartments are being sublet versus owner occupied. Usually it's like 30%. If we're looking at a building that has more than 30% of the units sublet, that's going to be an issue for lenders to lend in, and we need to ask for an exception.
Yes.
Right?
Yes. And then the exception, if the building doesn't meet our guidelines, is usually based on the customer's profile. And it always helps to have assets with the lender that you're asking the exception for.
That helps,
Yes.
right?
Having
Because it makes you a
assets
stronger
makes
borrower.
a big difference.
Yeah.
Yes.
So then you as the borrower, we at least have options, right? So if you're using a lender that I refer to you, like Carrie, that I trust, that I know we can have a real conversation with, she's going to make herself available to us. She's going to give us the time. She's going to give us the proper explanation, which you would think you would get from anybody, but you don't get from everybody that you work with. So you're going to have someone that will come to us and say, this is what we've encountered. These are our options. You as the buyer have the right to say, well, I don't want an exception on this. I just don't like this building because whatever you just told me freaks me out. And this is something that I don't want to buy into a building that needs X, Y, and Z exception. But very often the issue is not excessive.
Extreme.
It's not extreme. It's usually
like
not.
you shouldn't walk away.
Right. It's usually not deterring you from doing the deal because in the grand scheme of things, the issue is temporary or not a big deal. And you still want to pursue the property and you just need someone that will discuss the pros and the cons or what does this really mean for me and do the deal. So, you never really know. When I purchased my condo, the reserve fund was inadequate technically. And I wasn't in the business at that time. This was a decade ago, more than a decade ago. And I didn't know what that meant for me as a buyer. Like I had no idea what a low reserve fund means, right? So my scenario went along the lines of the broker that I was working with was able to get us an exception. So the lender did the deal anyway, despite the reserve fund being a little bit low. We got an exception, and all I knew was that we got an exception, and I really didn't care because they were like, oh, it doesn't matter. It's not that low. The reserve fund is not too low that it would be problematic. We got an exception. Yeah. And I'm very happy in hindsight that I purchased the property.
So you didn't get hit with an assessment rate when you moved in.
We did. So I didn't get hit with an assessment. They had a policy. Now this reinforces, this is the example that I give people that helps people to understand why the attorney that you choose is so important. Because I used an attorney that was referred to me from my family that they claimed was great. And I did not take the referral from my mortgage broker. I did not take the referral from my real estate broker.
Okay.
So I used this family attorney and I did the token mistake and the guy was truly terrible. It was an awful experience. I called his cell phone one time by accident and I got screamed at and he accused me of lying when I said that I thought it was his office number and I called by mistake genuinely. Wow. And meanwhile we text our attorneys that I refer to my client, texting basis. This guy, I couldn't even call him. And he did not read the meeting minutes for the board meetings. Mm-hmm. So he did not know about, nor did he inform me of the fact that the building was creating a new policy where if you sublet the apartment, you're going to get like $1,000 a year annual fee for subletting, which this was new. So I wasn't expecting it going in. I did know that I wanted to eventually sublet the apartment. Mm-hmm. I was pissed about it. It does track back to the fact that the building was looking for ways of building their funds, their reserve funds back up. So it all is together, but with a proper attorney that would have actually known what was going on and informed me, I could have made a decision, right? But in hindsight, I'm still very happy that I made the purchase.
And what would you have done differently? Because the fee is what it is, right?
It is what it is, and I don't know. I'm glad, to be honest with you, in hindsight, I'm actually glad that I didn't know because I think that I would have gotten cold feet and been like, there's so much at stake. Like, I just don't know what this, sounds like a lot of money. And in hindsight, I do think that it would have deterred me from doing the deal. But really, especially now being in the industry, I look at the building where I bought in and I know that I could not have found a better investment, truly. Like, this is the building that I show all of my investor clients whenever they want to invest.
Can you share with us the building address?
Yeah, I bought in 99 John Street in the financial district and I still love it to this day. It has low monthlies and we get a very nice rental price for the properties because the building has every amenity that you could want. And it runs lean. It's a pretty modest building, but it takes care of things. And I'm very glad to this day that I bought there, despite, the policy change, the subletting fee, whatever. Like in hindsight, you got to look at the bigger picture. And I'm glad I ended up where I ended up, right? Mm-hmm. But still, like, it would have been nice to be informed and to know more through the process,
Yes. So much about home buying is emotional.
Yeah.
And a lot of decisions are made based on emotions rather than like factual information. Do you know what I mean?
Yes. And fear.
And fear.
You get very scared when you're buying something this expensive.
Yes. Like on a scale of 1 to 10, how emotional would you say your buyers are?
Always 11. Always 11. Everyone's always 11.
Yeah.
Yeah. Yeah, and these are the things that like people don't know. You know what I mean? Like we're dealing with families and like people's lives. Like your home is your home. So it's like a big deal.
And even if you're chill, the most chill person in the entire world, New York City real estate will shake you. They will find a way to shake you.
It's different.
Even my most savvy, most intelligent, even wealthiest clients that are like, they can literally handle anything you throw at them. New York City real estate finds a way to get under your skin. There's always something at some point, but you need the right team to help you through it.
I agree. And to answer your questions and be accessible.
Accessible, yeah.
I always say that my process of doing mortgages brings out the absolute worst in people because I'll have people go crazy on me, but I know they're not crazy. I'm like, it's just bringing out the worst in them. Do you know what I mean? Like,
I say the
no
same
judgment.
thing.
I totally get it.
Personal, I know.
Yeah.
Well, what I always say, and we talk about it together, we laugh with the team, is that we're at work when we're working with our clients, but they're not at work.
You're right.
They are not.
This isn't their job.
No.
Yeah.
We are not being treated as a counterpart, at like a co-worker. We are not getting that. There's no HR. Like
These calls are not recorded.
We're thinking about, is this right? Is this vanilla? Is this kosher? Like, is this correct? Is this appropriate?
Yes.
We're working, but our
We're
clients are like,
filtered.
yeah, they're not. They're not. We're meeting on a Saturday in shorts and flip-flops looking at apartments on their day off. You know, it's like, this is not,
It's
you're right.
emotional.
Yeah.
Yeah. So I get that. And I think that does help. Like knowing that your lender like gets that emotional aspect, I think is a big deal. And you're
Definitely is.
brokers. You know what I mean?
And you can roll with the punches.
Yeah.
Uh-huh.
Like you can go crazy on me. I won't judge you.
I take it too.
Listen.
Yeah, listen, you know.
And you have to. Sometimes you even get it from us. Like you get it from me and Joe. We just scream for no reason because we're frustrated. And everyone that works with us knows, they're like, it's okay, Christina's gonna get over herself in a minute. She's just having a moment.
Yeah.
Sometimes people we work with, they're like, you don't have to yell at me.
Oh
I'm like,
my
we're not
gosh.
yelling at you, but we're just frustrated.
We're just yelling at the situation.
We're just yelling at the situation.
It's hard to be in the real estate business and not raise your voice, right? Because there's so much at stake. Like there's commissions. First off, there's people's lives, right? There's people's livelihood. And then there's like a huge commission and you've worked hours for it.
There's a lot
So
going
much
on.
money going in so many different places. Like there's just so much going on.
When my husband meets, because now with work from home, which I personally think work from home is like the worst thing that could happen to an intimate relationship, to be honest. Like I just feel like your spouse should never really need to see your work persona. Like I regret that John ever saw this side of me, to be honest with you, but it happened. And now whenever he meets people that I work with, like let's say I have people come over the house, we're doing a happy hour or a party or whatever, as soon as he knows that we work together, the first thing he does is he apologizes to them. He's like, I'm sorry about her. He's like, I hear your calls. He's like, I'm sorry. And
Oh my
like,
gosh,
"It's
that's
okay."
funny.
Yeah, it is.
So you're a different person at home then.
Yeah,
your personal
of
relationship.
course. Especially in this business, you have to be so assertive.
Yeah.
It's like not something a husband needs to see his wife do. You know, like I just do feel like that. It's changed things.
It's true.
It changes things. For
Yeah,
sure.
and it's definitely like changed. Like my mom was like, "You were such a sweet little girl." Like it's definitely changed who you are. Do you know what I mean?
I've become a savage.
Yeah.
I was like very soft spoken.
Not intentionally.
No, just because you got to get it done.
Yeah, exactly. So.
Right?
Yes.
Is your family like scared of you too?
No, but I'm similar. My work personality is the same I am at home with my family.
Yeah.
So they don't really see any. I guess I'm aggressive all around. Like.
It's just like I don't know. I used to play a better job at being like a nice little, like, I don't know.
Yeah, I've always like shown my true colors.
Your true colors.
Yeah, this is
So
what you're
funny.
getting.
So funny.
Don't be surprised.
So you have questions for me too.
Oh my gosh, yes.
I'm scared because I have no idea what they are.
I wanted to ask you questions. I know, this is great. So, Christina, it's so funny. Christina, we've known each other, what, like few years. I don't know. But
Yeah.
like right when I met her, we just like hit it off. I think we're similar.
I think
some ways.
we both like to talk for sure.
Oh, really?
Yeah. We could just, well, that's the thing with us is that we just stay on the phone and we can just talk forever
About anything.
about literally anything.
Okay, good.
Yes.
Yeah, no, I so appreciate your friendship and your partnership. It's
Oh my God. I love you.
Thank you.
I love you.
No, I love you too.
And it's important that I feel like I can loop you into my business. It's important. This is my business, you know, and I feel like to wholeheartedly trust someone is so important, and I have that with you.
Thank you. Oh wow, that's so sweet. Okay, so a few quick questions, or maybe not so quick. I was thinking, oh my goodness, it's been 5 years since our nation got hit with COVID, right?
Yeah.
New York City was like the epicenter of it. Like,
Yep.
And so it was 5 years, like in February. Remember the world
Yes.
shut down February 2020. So where are you seeing prices now versus 5 years ago when the world shut down?
Very
How
good
would you
question.
compare the market?
Very good question. So we are a little bit below where we were.
5 years ago.
Yeah, and it sounds weird to say that because usually you think appreciation over time with properties. But on average, in most neighborhoods, what happened was the pre-COVID market was still kind of a shaky one. Like even before COVID hit, there was a lot of conversation about recession. Everybody was saying it. And there was a lot of like fear mongering, and people were like, oh, the economy's been too good for too long. Like we're due for something. We're due for something. And people were just waiting for something to hit. No one thought it would be a pandemic. I mean, no one expected COVID except some very few scientists or whatever. But like,
Geniuses.
yeah, but like people in the industry or in finance were expecting something to happen. So people were starting to tighten up like a little bit, maybe save more or whatever it was. But the housing market was like fairly stable. Like it was fairly normal. And then when the pandemic hit, there was a brief moment in New York where things fell flat and things got very scary, very quiet. But shortly after, honestly, before the end of 2020, we saw a boom in the housing market in New York City. So that everything shot up. As soon as people realized that New York was not going to be a barren wasteland, which did happen quickly, much more quickly than most people expect or think happened. There was a run on New York City real estate in a huge way. Like everybody wanted in because there was some negotiability, but really not much. Properties were not being given away. Properties were not going for huge discounts, but there were a lot of people that came in and they were like, this is my opportunity to get in and to capitalize on this fear moment. And that's what happened. And that drove the pricing up. There was low inventory, which we never came back from because, of course, the circumstances. But pricing skyrocketed. And you can see when you look at data, there was a crazy spike. At
When
that
do you
point,
think the
into
highest point was?
2021. It was into 2021.
Okay.
And then it started to come down and regulate. Then we had the post-COVID 2022 market, which was very finicky. Rates started to go up then as well. And people started to, we had a little bit of normalcy, but really not much. And then we started to see things go down. And we've been on a downward trend since
2022.
Yeah, we've been on a downward
for 3 years.
Yeah, we've been on on a downward trend because then the rates started going up. People at first thought it was very temporary. They were like, oh, okay, like this is going to regulate itself soon, and then it never really changed. And we've had people waiting on the sidelines for 24 months now, just waiting to do a deal.
What do you think are the hottest properties right now that are moving the fastest? Brownstones, condos, co-ops. Is it 2 bedrooms that are moving quicker than 3 bedrooms? Studios? What do you
Very
think?
good question. Definitely condos and brownstones. I mean, are always
The top.
hot in demand. I mean, if you see one come up in Manhattan, it's going to be multi millions, and just usually as a function of the higher price point. They sometimes will sit a little bit longer, but they're in hot demand. And then out in Brooklyn, the private houses or the multifamily houses, and especially brownstones, you can't even touch. I mean, they're gone before they hit the market. So always this. And then when it comes to let's say ROI or the easiest type of property to sell or offload, you're definitely looking at the condos over the co-ops. And we're seeing one bedrooms are like a very stable, reliable product. It appeals to a large buyer set. So whether you're a single person, whether you're a couple, whether you're someone with one child, couple with a child, people will get into a one bedroom apartment early on, and they will stretch a one bedroom apartment late into their adult
long as they
life.
can.
Yeah, that's what people really do in New York City very, very often. So the one bedrooms are in they're usually in the hottest demand. Yeah.
Interesting. You're bringing me back. I had a one bedroom, and then we added a room when we.
You added a room.
Yeah,
Exactly.
And the door was a window, so you could see out of it. So.
Oh, yeah, that makes sense. That's what a lot of people do, like the partial window or the full glass door, like a sliding door is very popular.
Dr. Wall came in and made the room an hour.
There you go. That's what we do in New York. People just keep slicing it up until you can't slice it up anymore.
Exactly, until there's no more space.
Yep.
Well, good. So, time on market, right, is so important. And pricing something right so that buyers don't think there's something wrong with a property is like such an important science.
So important. And I love when I'm having a conversation with a seller and they understand it from the beginning. Like, for example, this is the kind of market where you need to price to market value. If you overprice in today's market, as of today, we're in mid-January, you are going to sit on the market if you price too high. It's not the kind of market where you're going to get this like super optimistic type of pricing, and we need to get people in the door and we need to create competition, and that happens when the property is priced correctly. You price correctly, you'll get bidding wars. We're seeing bidding wars in Manhattan still, and always in Brooklyn, but there are bidding wars in Manhattan. I just showed a property on the Upper East Side. We were not the only offer in. I just listed a Tribeca loft. You worked with us as well on it. Duplex apartment. We priced it right, and we had a full price deal in one day. But there's another listing in the building priced very similarly to us, maybe just a little bit more, and they've been on the market for over 120 days. So you have to be careful in this market. How long
is too long to be on the market, would you say, in terms of days?
Everything will sell, so I don't ever want to like freak anybody out, or there are certain types of properties that will tend to sit a little bit longer than others, especially ones that are in strict co-op buildings where you're very selective about the type of buyer that the building is going to approve. So certain buildings, don't allow pets, for example, and you're using a reduced buyer pool. So there are reasons why certain properties will sit. But I would say, after 6 months, you want to understand like what's really happening there, but this has been the kind of market over the last year where I take clients into a perfectly good property that does not have any issue or red flag. It's been on the market for 180 days, and my client's like, why? What's wrong with it? There's nothing wrong with it. It's just that we were in the type of market where properties were sitting. They just were sitting. People are using high levels of discretion. Again, the higher interest rates, it's more difficult for them to afford places. And the level of discretion is very high with buyers.
They're picky.
Yeah, but we do the deal and there's nothing wrong with it at all. And it was waiting for them,
Yeah.
Average.
Wow. So 100. What do you think is average?
I like to see a deal happen within 60 to 90 days in a very average market, given, you're pricing 5% over market value, 10% over market value. You can have a deal in 90 days, but if you want a quicker deal, you need to price aggressively. Yeah.
Got it. Interesting.
During a hot market, during a quick market, you can do, 30 days. The average will usually be around 60.
Okay. So anything longer than 60, it's considered like sitting, right? Or like maybe 90? Because sometimes in New York, it can take 90.
In Manhattan, things do sit. Things just do sit. It doesn't mean something's wrong
with
it.
So after how many days?
It's not like your private house. It's not like your private house, like suburb environment at all.
Yeah, it's definitely like a niche place. Like in most parts of the country, it's a seller's market, right? Like if you're selling, you're sitting on a gold mine. New York City's different.
Exactly. But we are thankfully thankfully this year, we are entering a time that feels very good to sell. Again, like we said, we had a very nicely priced. My sellers are very happy. The listing in Tribeca went quickly, and we have 5 other listings hitting the market this month. And finally, like, we're getting the pricing. We're getting it. It's much more competitive among our buyers right now. We're negotiating hard for things. And we have to come up and we have to meet sellers. Like, finally, the market it's not a seller's market just yet, but it's finally turning. It's finally getting better for sellers. Yeah.
Yeah, so you're like going from a buyer's market to like more neutral,
Yes.
right? And neutral is like the ideal.
Yes.
So you don't feel like you're getting ripped off and everyone's happy.
Exactly.
When it's more of a neutral market.
Exactly.
Okay, so I have my last question for you. And it's like I'm saving the best for last.
Oh,
okay.
what is it?
So you just mentioned that you have like 5 listings coming on, right?
Yes.
What's with the new coming soons, right? The past 2 years, I've seen brokers, and like I do mortgages all over the U.S. So I've seen these brokers like have 5 coming soons. So what's your opinion on the coming soon marketing strategy?
I love it. Most of our marketing is done before that property hits the general public websites. We do a ton of pre-market advertising because, firstly, it's interesting to buyers. Every buyer wants an opportunity to see something first. They want the opportunity to negotiate before it hits the mainstream, and now you have everybody in bidding against you. So there's a lot of appeal to the pre-market listing advertising. We do a lot of mail print advertising that goes out about new listings before it ever hits, and we do large scale events at listings before it hits the market too. We like doing that a lot, and we get a very good turnout to these types of events. And what it does is it helps us get people in the door, because people that attended a pre-market event or that saw pre-marketing information have it like on their calendar. They're coming to the first public open house.
They're excited about it.
Even if they attend a pre-market preview of sorts, they come during the first public open house because they want to see what the competition looks like.
Yeah.
They want to see the apartment at a different time of day. They want to get that second look at a time that's convenient for everyone. So yeah, we get busier open houses when we build the buzz ahead of time.
Yep.
And pre-market deals are great. You know, sellers love to be quick and easy, low drama. And buyers love it. So we love the coming soon advertising.
Yeah, no, I think it's great, and I'm confused why some agents do it really well and more often, and other agents don't. Do you know what I mean? Like,
it depends, right? Like if an agent is a seasoned listing agent or a very strategic listing agent, you're going to see them doing it. Other agents, you know, they're getting a listing, they're tossing it up on Zillow, Street Easy, and they're just like, not to say anything bad about any agents, but like you're putting it up online and you're like letting the phone ring and hoping for the best.
Yeah, but
honestly.
to me, if you pre-list it, it's like more momentum. You're driving up the price for your seller. There's excitement.
Yes.
As a listing agent, you have more opportunity because you have more buyers calling you, right? That
Yeah.
don't have representation that you could help find the next place. So like, to me, it's such a good marketing strategy for agents.
It is. And the other interesting thing is that if you are working with a buyer's agent, which I always advise buyers to be working with their agent representation, we are communicating these coming soon listings to our agent network mainly. Like they are on, it hits our databases first, and we communicate with each other. Like I will send news about a new listing coming on to my Element network of thousands and thousands of agents first.
Like how many weeks before it's coming on? If you have
a week or two.
Okay.
No, it's not like ridiculous, because like you got to have like the perfect balance to create hype and then actually execute on it before people stop caring.
Yes.
So
yeah,
it's
before
like
people forget.
Yeah, it's like not a lot of time,
Okay.
but it's important. It's like a very critical week. And yeah, 100. So if you're working with a buyer's agent, they're going to get that news of the coming soon listing before you get it. You have no way of knowing about it.
Yeah.
So
It's
so,
interesting.
Yeah.
Yesterday I did 3 pre-approvals and it was all for coming soons.
Wow.
And I'm like, this is a new thing. Like this wasn't around 2 years ago.
And a lot of the other companies are like kind of jumping on and bringing features to their brokerages that allow them to see the coming soons and to like help them advertise it.
Market them. Oh, good.
Yeah.
Well, thank you
That was
so
a good
much.
question.
Yeah.
Thank you.
This is so fun.
This was amazing. Thank you so much, Carrie. I feel like our listeners are going to eat you up. They're going to love you so much. We need to do this quarterly.
Thank you. Okay, good.
I have a feeling there's going to be a lot of news as the year unfolds.
I agree.
And we should do this quarterly to make sure that we're always on top of it.
I agree.
Yes.
Things are always changing in real estate.
Mm-hmm.
So
Yes.
you learn something new every day.
But I feel like this is a transformative year.
Yeah, I agree.
It will be. Thank you so much, Carrie. We appreciate you.
Thanks, Christina. I
Thank
appreciate
you guys,
you
and
as well.
stay tuned for our next episode. We have a stunning, innovative, I can't say enough cool things about her artist coming on in our next episode, so you won't want to miss it. So stay tuned for that, and thank you for being here.